Joining me now, I had the pleasure of meeting at Jackson Hole's Federal Symposium in Jackson Hole several years ago, former Kansas City Federal Reserve President Thomas Hoenig. Thanks for being here. First of all, this is a tricky situation, isn't it, for the Federal Reserve? We had 7 rate hikes in 2022, big ones, 4 at 75 basis points. And now they're signaling 2 or 3 more rate hikes in 2023, although smaller. Was the Federal Reserve not aggressive enough? And now has it gone too far?
Well, to answer your first question, the Federal Reserve was late to the tightening game because inflation was well underway, and they continued their easy moves in 2021 and 2022 early part. And so they had to, I guess, react, and they reacted strongly. But what they've done is raise rates to constrictive level. They're going to have to do that if they're going to get demand back in line with supply. And that process is going to take a while, and that's what they're in the process of doing right now.
So CPI inflation is still 7.1%. The administration is cheering a 7% inflation rate. But where do you think the interest rate should be in order to get that inflation rate to 2%?
Well, they're on their way to getting to the right number. I would say they have in mind getting it above 5%, 5.25%. Getting it there, I think, is the right thing to do, at least that high. And then the hard part, though, for them will be keeping it there. And keeping it there as the economy slows with these higher interest rates and unemployment rises with these higher interest rates and the economy slows. That's when they'll really get the pressure to start reducing rates before inflation is even close to 2%. And that's what you already see coming with some of the politicians and so forth. So they're going to have to be at 5% or higher, but the hard part, they're going to have to stay at 5% through the course of this year, next year, 2020.
Yeah, in the last 30 seconds that we have, the Fed chairman is concerned with core inflation without food and energy prices is moving sideways. It's at 6%, slightly down. Do you think that, are you worried about core inflation and you know, is it moving sideways?
Yes, I am worried about core inflation because that's more of the broad economy, and it is coming down more slowly. And I think it will. As inflation has got embedded, it's going to be harder to get that out. And so it's going to put more pressure on the Fed to keep that rate higher longer than they would like and that anyone else would like. But that's going to be necessary if they really want to capture and conquer inflation and bring it back down to 2%.
Yeah, inflation is sticky, and we've got to run. I appreciate it. Thanks, Thomas.
You bet.